By continuing to access this site, its content, or establishing any contact with Elliott Wave Live, you acknowledge having read and understand all disclaimers and risk disclosures. The following information described within this video or blog post contains information pertaining to hypothetical trades. These trades were not executed and are for educational or illustrative purposes only. Please read the CFTC Rule 4.41 that's on your screen, and keep in mind, by continuing to use this site, establishing any contact with its author and or clicking on any of the links, you acknowledge having read and understand all the disclaimers and risk disclosures contained within my blog site. Hello, my name is Mike Sinabaldi, and welcome to this week's video edition of Heard on the Street. In this edition, I'm going to take a look at the following markets: the emini S&P, the DAX, silver, CAC 40, NASDAQ, and crude oil. The first market that I'm going to take a look at is the S&P. At the weekly chart level, the 2007-2011 analogy remains on track. The two highlighted patterns are fractal in nature, and each has made tests of the 10-week simple moving average, or the equivalent of the 50-period simple moving average on the daily chart. Over the next few weeks, sellers should remain in control of this market. Turning to the daily chart level, we have 4 waves complete, working wave 3 of wave 5 to the downside. The most probable wave relationship for the termination point of wave 5 is where wave 5 equals a 0.618 multiple of waves 1 through 3 at 1062. Thereafter, a large multi-month relief rally should occur that tests the neckline. Also note that I have included an alternate count that would call for a precipitous decline, as waves 1 and 2 would now be complete and intermediate wave 3 is underway. How will we know which count is correct? Well, by the degree of volume and breadth, as fifth wave should be weaker than its third wave cousin. If volume and breadth are greater, then odds are that the more aggressive count should be applied. The next market that I'll cover is the DAX. At the weekly chart level, wave 5 of intermediate wave 1 completed, where wave 5 equals a 0.382 multiple of waves 1 through 3, and the market should now rally in a wave 2 advance to the areas surrounding the 0.5 and the 0.618 retracement level of wave 1. Structural resistance comes in at 64.1250, which was previous support. Breaks below 49.62 negate this interpretation. The next market that I'll cover is silver. At the weekly chart level, I'm looking for a 5-wave decline. Waves 1 and 2 are now complete, with intermediate wave 3 underway. Price has broken the 2-4 trend line, a bearish sign indicating a change in trend has occurred. The count suggests that further selling is in order as price draws to where wave 3 equals a 1.618 multiple of wave 1 at 1639. At the daily chart level, from minute wave 2, the slope and length of each bar argues that the current market position for silver lies within 1/3 of a third wave. This indicates that the count is indeed correct. The next market that I'll cover is the CAC 40. I'm presenting this series of charts as my featured market of the week because it's do or die time for this count, and it offers a great trading lesson. From my global gains analysis, the count suggests that cycle wave B would unfold in a flat correction, and that intermediate wave B is an expanded flat. Price is now traded just beyond 22.27. At the weekly chart level, we can see the 2 fib levels that provide support for this market, where wave C equals a 1.618 multiple of wave A at 12.27, and the 1.618 reverse Fibonacci extension of wave B at 26.9350. From an academic standpoint, both of these levels are at the maximum extensions for an expanded flat correction, so other interpretations are certainly possible. However, keep in mind that the larger degree pattern is a flat that would allow for further declines. It would only negate below 24.6450. Drilling down to the daily chart level, we find an additional fib level that would be supportive of our conclusions, where wave 5 equals wave 1 at 27.50. Stop the video and tell me what you see when looking at the current subdivisions of wave 5, then continue it for my assessment. If you came to the conclusion that we have wave overlap and it would be an incomplete ending diagonal, you are correct. If you tried to force a complete diagonal count, it's flawed due to the fact that wave 4 is larger than wave 2, and wave 5 would be longer than wave 3. So what's the conclusion? At the 240-minute chart level, we indeed are working an ending diagonal, needing another up-down sequence to complete the entire pattern. Since wave 5 must be smaller than wave 3, and that 2464.50 is our invalidation point, we can project the termination points of wave 4 and wave 5. Since wave 3 measures 394 points, we can add this to the invalidation point of 2464.50 to arrive at a minimal wave 4 termination point of 2559 plus 1 point, which equals 2860, so that the requirements of wave 5 will be lesser than wave 3, and that wave B purple will not exceed the origin of wave A. From an academic level, wave 4 of an ending diagonal usually retraces the previous wave by 0.66 or 0.81 and would yield the following termination points for wave 5, 2618 and 2559.50. With the lower converging trend line coming in near the low projection, I feel that the 0.66 retracement level would offer a better fit to the overall pattern. So look for 2559.50 to terminate the entire structure. The next market that I'll cover is the NASDAQ. At the weekly chart level, minor waves 1 and 2 are complete, working wave 3 down. As I mentioned during this week's commentary, the NASDAQ is leading other U.S. indices down, and it's further along in the count than the Dow and the S&P. Wave 3 targets around 1559.25 and 1583, which are the 0.618 retracement level of cycle wave B, and where wave 3 equals a 1.618 multiple of wave 1. At the daily chart level, the rally that began on Friday should continue for a day or so. That would complete wave 2 at the 0.5 to 0.618 retracement level of wave 1. The final market that I'll briefly discuss is crude oil. At the weekly chart level, I'm working a series of 1-2s. 1, 2, 1, 2 to the downside. The count suggests that the next significant level of support is where wave 3 red equals a 1.618 multiple of wave 1 at 50.22. Let's leave it there for this week. I hope you found this video helpful, and best of trading.